Hi all, welcome to Keerthi's FinFo NRI. Today's topic is little different, but about this I had been researching and I had really want to share some important information. It's about something that I never openly spoke in any public platform. It's about Bitcoin. I want to tell you in this video why I stayed away from this asset class at the beginning and now I'm changing my opinion. How adoption at various levels now is taking place, how to invest, and as an NRI, if you are planning to invest, what are your options as well as tax implications. So at the end, what am I planning? So stay tuned till the end. If you're new to this channel, I'm Keerthi. I'm based in Dubai running The Consultancy, which is an initiative of Keerthi's FinFo, which assists thousands of NRIs in tax, FEMA and investing journey. I'm a CS member, SEMA affiliate, AMFI registered, overseas MFT and ESCA licensed in Dubai. So now let's start because the topic is very important and vast. I want to be honest here. So I want to start with a confession. In 2019, when Bitcoin had crashed to $3,000, we had chance to invest. But I did. Today it is trading around 104,000. That one decision had costed me life-changing money. But here is the thing, I'm not here to beat myself up. And I'm here to share why I was wrong and what had changed and whether it is too late to get it. Stick around because by the end of this video, you are going to understand why certain governments are creating reserve and supporting it. Why some companies have invested billions. Real pros and cons, nobody talks about it. So let's dive in. Let me first start with my story, why I am revisiting and reviewing everything. See, when Warren Buffett himself could mistake for a long time, we all can miss such new asset class. But the learning should compound and not our mistake. That's the kind of community that I want to create, and I honestly believe that we should share our regrets, learning, discuss, and help others to take one stance. If you're still watching this video and never subscribed, please do it now. Because if you don't like this channel, you can always unsubscribe. Just by clicking the subscribe button, sharing the thoughts in the comment section, you contribute immensely to spread the perspectives. Now let me take you back to 2019. Bitcoin had crashed from $20,000 to $3,000 and everyone was saying that it was dead. And I was one of the skeptics. Here is why I didn't invest. First of all, I didn't really understand what is this whole scarcity argument. How could something on the earth or on the cloud could be store of value? It's just digital code, right? I thought you need something physical like gold and I was really stuck in that conservative thinking. Second is, of course, regulatory fear because I don't like compliance risk. I genuinely believed that governments would crush Bitcoin. And think about it logically, why would any sovereign government would support such a decentralized asset which they cannot control? India had already cracked it up. And I thought probability of Bitcoin becoming mainstream was maybe 1%. And the regulatory risk was too high. Third, this scam narrative. It was everywhere. Every mainstream economist or every financial advisor, they were calling it Ponzi scheme. The fear of losing everything was so real. So I sat on the sideline and I watched really Bitcoin to go from 3,000 on to 20,000, from there to 69,000, again back down and now around $104,000. If I had invested $10,000, let's say only $10,000 in 2019, that is around 3,000 per Bitcoin, I would have had 3.33 Bitcoin. Today, that would be worth approximately $346,000, which is 34x later. Here is what I have actually learned. When facts change, you need to change your mind. And the facts actually in the space has dramatically changed. So let me tell you why and what's changing. Look at many experts who have changed their opinion. Institutions have adopted it. Governments too started backing it up instead of cracking it up. Huge macro changes in crypto space. Financial heavyweights like, Ruchir Sharma or JP Morgan CEO, they have always been little skeptical and now they are, becoming from skeptical to neutral. Ruchir Sharma, who believed that there is an over-dependency on US dollar and the debt problem is a ticking bomb for US economy. So either the gold or crypto should come as an asset which can reduce over-dependency, though not as an alternative option. He has always been calling this as a new gold, but he never invested in Bitcoin. Now JP Morgan CEO. Listen to this clip.
I could care less about Bitcoin. I don't know why I said anything about it. You all can do whatever you want, and I don't care. I could care less what Bitcoin trades for, how it trades, why it trades, who trades it. If you're stupid enough to buy it, you'll pay the price for it one day.
He literally said that who cares for Bitcoin? And the government crush such asset because governments usually do it. Don't they do? Even with an individual investor, don't they crack down illegal undeclared asset? Can you own or trade anything with no tax payment or disclosure? No, right? Same logic which I thought till today. In one interview, he even calls it as overhyped fraud. But Larry Fink of BlackRock has been always supporting Bitcoin, and he believes even today that tokenization of all the assets, including crypto, Bitcoin, real estate, it had begun. And they had to move from traditional financial system to digital according to him. So they went really aggressive, and as on the date, you can check BlackRock ETF, Bitcoin ETF, IBIT. It has 80 to 82 billion USD AUM, asset under management. Now, I think really 2025 is Bitcoin's breakthrough year, and let me tell you why. There were a lot of, convergence of factors that never aligned before, which actually made Bitcoin from a fringe asset to a financial powerhouse. And what are those factors? The main important, the number one factor, Trump factor, which started from pro-crypto presidency and the regulatory shift through Bitcoinism. On March 6, 2025, I know you, everyone would have got the shock of our life, right? President Trump signed an executive order creating America's first strategic Bitcoin reserve. This is huge. This is the moment Bitcoin went from fringe asset to official US government-backed reserve alongside gold or any other foreign currency. But now think, why would any sovereign government do this? Of course, I have to cite there 3 official reasons. First, stop selling too early. Government claimed that it wants to stop selling early since the confiscated reserve, the bitcoins, were sold quite early, which had been causing the loss around $17 billion. Second, consolidated the scattered holding in FBI, DEA, etc. and built a place-like digital fort. That's what they say it officially. Reason number 3, this is the real reason. US economic dominance. Here is where it gets really interesting. The US actually today, it has 38 trillion of debt, ticking bomb. They are looking for some creative solution because you have to come for some balance sheet manipulation. There is no way out otherwise. Some analysts believe that if Bitcoin appreciates significantly and US holds enough of it, it can help to offset at least a portion of debt. It may be a long shot, but you have to take a bet, right? History has a proof. US can create an asset, relink, delink, can do anything because it is US. This time it looks like they are going to devalue US dollar, revalue Bitcoin to set off the debt. But here is what they are actually not telling. Once the unchallenged king of global finance, the US dollar owes its throne to military might and safe haven status. But with 38 trillion of debt, widening deficit, nations are actually eyeing for alternative option, and US is slipping from its position. Think of debt burden. America's national debt has ballooned to $38 trillion, which is 125% of their GDP as on November 2025. Interest alone is costing $1 trillion a year. This is not just number, it's a ticking clock on fiscal freedom. And widening fiscal deficit, there is a gap, there is a hole of $1.78 trillion. That is 5.9% of GDP. Revenues are lagging as spending is surging on entitlement and security. Without reforms, this is projected to swallow at least $2 trillion per year by 2028. What about treasury bonds? They are also losing value. These treasury bonds, they were once rock solid, but now they are crumbling. Yields are hitting 4.1% in November 2025, slashing the prices, erasing billions. investors are actually spooked and looking for alternative. Now think with all this scenario, what can save America? Only Bitcoin reserve. It is the only one way left out for US, because they can portray to the whole world that Bitcoin is a store of value and US has the biggest reserve of that store of value, so they are able to manage any kind of debt or deficit. So this is a script which is written by them. So these changes at government level in US, especially removing the biggest risk which I was bothering about in 2019, regulatory destruction, is gone. The US government is not going to ban an asset officially which is holding a reserve, right? At least not in the short to medium term. So that 1% probability which I gave Bitcoin becoming mainstream, it had become my 100% probability, because Trump can make any 1% probability as 100% reality. Second, Bitcoin goes mainstream because you have to understand even many companies started investing in it. When Wall Street finally says, yes, corporate America's entry happens, we being retail investor cannot afford to ignore it, because many Nasdaq companies are adding Bitcoin to their balance sheet. MicroStrategy, Tesla, Coinbase, Binance, so many Nasdaq companies started piling it. The biggest name, and I'm sure most familiar one, let's take up Tesla. In January 2021, Tesla had bought 1.5 billion worth of Bitcoin, that is around 43,200 coins. Today, they still hold over 11,500 Bitcoin worth more than 1 billion. Let me give you some perspective of my opinion, the thought process behind it. Why even I started thinking about it? Because see, the government is backing, institutions started adopting it in the balance sheet. Now, what I really feel is, always, rich bother about capital preservation, and there is always a constant effort to find what is store of value. 19th and 20th century, gold was a favorite asset class. How much investment is done by the people in store of value is $450 trillion. Now see, Bitcoin can be store of value. Maybe there is no intrinsic value or utility, but as a capital preservation, why it comes as an alternative option? Because see, once you make money, there are many factors which can break that asset's intrinsic value. Let's say that you have invested in real estate. It's prone to state control, maintenance, state taxes, traffic, rent control, weather, and any kind of tsunami kind of natural calamities. Financial asset like FD or stock is subject to competition, war, recession, tax, country's policies, position, currency devaluation, and whatnot. Now, Bitcoin is an asset class which is above this risk by the definition and nature of it. So, a guy called Satoshi discovered a method to transfer value with no intermediary involved, an ideal solution for store of value. And now, we don't know who is Satoshi, but he defines what can be store of value and designs it which can escape even regulatory authorities' notice. So what can we conclude from here? Bitcoin is the only one crypto which has all the power, be it computer power, political power, scarcity acting in its favor. It is the 7th largest asset by market cap. It is the asset which is not having any correlation to the debt and the inflation, which is actually so powerful hedge, right, other than gold. Here is the asset performance chart of last decade for your reference, which shows that equity, gold, S&P, Bitcoin, and you see yourself, Bitcoin is a clear winner. There is a segment which does not believe in government or the fiat currency giving all the power by buying and holding Bitcoin. This has brought us to think, should we be investing? And there may be set of countries like India who may never accept Bitcoin. But there are countries like UAE or some European countries, Singapore, which are already trying to adopt and lead this revolution. These countries view Bitcoin and crypto as a driver of economic growth, attracting talent, capital, and tech firms. For instance, in UAE, it aims to become global blockchain hub in order to diversify from oil. Switzerland and Singapore, they foster innovation through sandbox for testing crypto product. El Salvador uses Bitcoin to boost financial inclusion and remittance. So now we have to wait for a few years to get the answer who is the leader, or will they be leader or multipolar system. In that horizon, if you think, even US will undergo a rough phase. So what as a retail investor we can do? we may have to give a very small allocation, small percentage of exposure to Bitcoin. Now I know you might be thinking how to invest. Options are simple. First is ETF, which allows you to gain exposure to Bitcoin's price without directly owning cryptocurrency. These are, investment funds just like stock, they get traded on stock exchanges like NYSE or NASDAQ, holding actual Bitcoin or futures which are tied to the value. So how can you get started? Just open a brokerage account, and if you don't have the one, and then search for popular Bitcoin ETF, maybe BlackRock's iShares, like IBIT. Fidelity is also Bitcoin fund. We have BTC. And just like shares, you have to buy that. And I would say that this ETF, this is the safest and ideal solution for the beginners and who prefer regulated hands-off investing and want to avoid the headache of managing these keys, wallet, etc. So second one is crypto exchanges. So here you get direct ownership, of Bitcoin. You are using a centralized crypto exchange where you can buy, sell, and hold actual BTC. This gives you full control over the coins, which you can transfer, spend, or stake. Staking also is a very good option if you want. The popular exchanges you must be knowing that, Coinbase or Binance, etc. So the steps that you have to take is you have to sign up and complete, KYC verification and fund your account via bank transfer, credit card, or some fiat all wraps. Buy Bitcoin directly means here in the exchange you can operate 24/7, so you can trade it anytime. This method suits for those who want to use Bitcoin for the transactions or hold it for really long term. And you have to remember this requires significant vigilance on security because you should have a two-factor authentication at all. Third option is hardware wallet. Maximum security for serious investors. Why? Nobody can know, nobody can control. These are the physical devices where you can store Bitcoin with a private key offline, providing so-called cold storage to protect against online hacks. So they are very essential if you're planning large holding or long term. So the top options are like Ledger Nano X or Trezor Model T. These are all open source. They have different touchscreens interface. Cold Card, which is Bitcoin focused, and they say it is air gap for ultra security. So how you have to be using this third option? You have to purchase from the official site because you have to avoid the tampered devices, and you have to set up by generating a seed phrase as for backing up securely offline, and you have to transfer the Bitcoin from an exchange to the wallet citrus, and this is actually best for holders who are long-term holders who know a little bit of tech and they prioritize security over convenience. Pros and cons of each approach. This is really important. Let's say if you are considering Bitcoin ETF, the best part of that is it is fully secure and it is regulated. You don't have to worry about the hacks or losing the keys, etc. So it's very easy integration with the retirement accounts like IRA also. High liquidity during the market hours you get, and there may be potential tax advantage in some portfolio. Who knows? Government also may announce that. Lower operation risk you have, right? Because custodians are handling all the storage. But the cons are like you don't have direct ownership, and the management fees are around 0.2 to 0.5% annually, and there is limited market hour. There is no 24/7 access, and they may not also perfectly track Bitcoin's movement. See, with the crypto exchange, you get direct ownership and control, 24/7 trading, and maybe zero fees also on spot buys, right? And you can access educational tool and the conversations. You can earn interest or staking, as I mentioned earlier. But the problem is custody risk. Like, we all know the famous episode of FTX. They require KYC and they face regulatory restriction. And what if the exchange itself, becomes like FTX? Third one, hardware wallet, actually you are comparing. I would say that it is superior in terms of security because you have offline key to protect against cyber threat. Self-custody means there is no third-party risk, right? And it's typically for the long-term investors, huge investment they're considering, but the upfront cost may be $50 to $200. and the risk of physical damage or loss, which we have seen. Internet is full of such stories, right, where people forgot the password or lost it. So it's actually not ideal for non-experts to set up. Now, if you have really invested, you must understand the tax implication also. So let me focus on Indian taxation, because each country will have its own different rule. Depends on which is your resident country. If you are an NRI for India holding Bitcoin or the crypto, Indian tax authority may classify, always in India it is classified as VDA, virtual digital asset. Rules are strict. Non-compliance can lead to severe penalty. As of financial year 24-25, there were no major changes. How Indian tax authorities view your crypto holding is, it is VDA, okay, under Income Tax Act. So gain from the trading, selling, transferring, they're all taxable if at all they are sourced in India. That means they are done in Indian exchanges, or you are a deemed resident. Otherwise, you don't have to bother. Even the foreign held Bitcoin may be reportable if it generates Indian taxable income. You have to understand, if it is an undisclosed asset, that can trigger huge penalty in India. So reporting requirement you should never ignore. You have to file your ITR. Okay, so if you have VDA income, and because you have to report that in the schedule, which gives all the detail about the acquisition, sale, and the gains, etc. And you also have to disclose a foreign asset if it is held abroad, and this is so important for returning NRIs. And in case if your taxable income is going about 2.5 lakh, as such you have to file your tax return in India. Now, if you're considering the tax implication on the gain and transfer, there is a flat 30% tax on the profit plus 4% cess. No indexation, no deduction beyond the cost of acquisition. Government basically discourages 1% TDS on the transfer, and 10,000 in some cases, or less than 50,000 deducted by the exchanges. Now, very important, losses cannot be offset against other income, but you can carry forward for 8 years against the future VDA gains. So for returning NRIs, filing the tax return is so important, because usually they do some common mistakes, non-reporting of the transaction, or ignoring the TDS, or ignoring the double taxation, non-disclosure of foreign income, incorrect valuation or classification. All this is going to really cause them headache. So in case if you are a deemed resident, or if it is Indian source returning NRI, take note of it. At the end, let me tell you, see, US always had been a very aggressive country focusing on speculation. But I honestly believe in Warren Buffett philosophy. If you don't understand, just stay away. But now I want to allocate 2 to 5% graduate through ETF, because I don't know how government can come up with a crackdown. I'm not so good at private wallet, so ETF is the best possible option. That was, I'm sticking to SIP, and I'm okay if the amount invested is becoming zero. What is the thought process is, I honestly feel that there should be a hedge against USD. USD is in real threat. But if you don't know your risk appetite, and if you don't like to take so much of risk, better to stay away. Because even a diversified equity portfolio is going to give a good compounding, which is enough for you. And for me now, when I see such a debt and deep problems in US, where it is losing its status as a reserve currency and even as a payment currency, if the countries start launching their own CBDC and they announce their own peg, that means every country will have its own place. There will not be a leader at all. We may be heading towards multi-polar system. So at that time, I cannot place everything in USD, right? As of now, we have diversification between US economy and Indian economy, but still, I'm limiting my exposure only to tech in US, because tech is truly global. It is not related only to US economy, okay? So they have their own ability to scale up and get the, customers all over the globe. So they may be immune to the problem, which is now, there in US economy. But if you think as USD, as a currency, it's losing its relevance. So how do I hedge it? Now let me know your thoughts and strategy in the comment section. Once again, thanks for watching, and don't forget to subscribe to the channel. And if you like the video, share it with your friends.